There is this growing narrative, all said and done. The global people are viewing us as uninvestable. Is that disappointment or is that criticism fair?
Yes, India is right now out of favor, but all it will need is...
But is there a worry of India becoming more of an AI consumer than an AI creator?
Foreigners have also been selling India and buying into some of the other countries, whether it is Korea, I mentioned Taiwan and Vietnam and China and Japan. Unfortunately, in India, we don't have any of these companies, whether the chip manufacturers, the memory guy manufacturers. India generally has been lagging behind in anything to do with capital-intensive industries.
Deeper structural reforms are needed in India to change things around?
We need a very, very quick fix solution to this West Asia crisis. We can't afford oil at $120, $130 for sure. It's not only stability, but stability of currency also, which makes a big, big difference.
Individual sectors, financials, I believe that has been a consensus overweight for years. Are you not worried about net interest margin pressure overall?
2014 to 24, China had given zero return, 10 years. Japan gave zero return for 30 years. Korea, no one even wanted to touch with a barge pole. And foreign holding in India at a 10, 15-year low. I think there is a big risk for any global investors to be ignoring India.
For over 3 decades, Sunil Singhania has been one of the most respected voices in Indian investing. From managing money through some of the biggest crises in modern market history to building Abakkus Asset Manager into one of India's fastest growing investment firms, he has built a reputation for conviction, discipline, and long-term thinking. What makes him stand out is not just performance across cycles, but clarity through chaos. Through the dot-com crash, the 2008 financial crisis, demonetization, COVID, and now a world shaped by tariff wars and AI disruption, his core investing philosophy has remained remarkably consistent. Back strong businesses, stay patient through volatility, and let compounding do the heavy lifting. So let's begin by talking to him about his outlook on the markets, what you should do in times of crisis, what patient investing is all about, sectors with promise, and so much more. Sunil, thank you so much for taking time out. This has been so hard to get you, so I'm so glad I finally pinned you down. But I just want to talk about the overall markets right now because there's so much to discuss. We're at a very interesting point with the kind of global headlines. There is this overall slowdown and tension in the air, but yet everyone's talking about India's resilience. Your views?
No, I think times definitely have been challenging. There's no doubt about it. So I think ever since, towards the end of 24, we've been grappling one thing coming, one after the other. Obviously, the economy had slowed down in 24, but I think the economy has picked up for sure. However, we had this tariff-related issues, which lasted for a year almost. And then even before the West East Asia crisis and in between the Russia-Ukraine war and now, we have had multiple small conflicts, and closer home we had India, Pakistan. Frankly, the government did act, and this 1 lakh crore of income tax benefit and 1 lakh crore of GST benefit with rationalization, along with the RBI move towards infusing liquidity and cutting interest rates, we had started to see the economy firing. In fact, if you see October to April, the economy is done very, very well, whether it is, vehicle sales, two-wheelers, four-wheelers, tractors, commercial vehicles, retail sales, even large companies like Nestle, which have not grown the way they have this quarter, almost 20% growth. And frankly, that has got reflected in the corporate profitability also. So December was the first quarter where profit, outperformed the analyst expectation. And March so far has been very, very good. Yeah. I think when things were all going well, obviously this Iran thing has come as a big shock. And it's been now almost 2.5 months. No one expected it to last for so long. And I think that has been the major concern as far as India is concerned. But it's okay, things are stable. But yes, for sustainable, improvement in the economy and the equity markets, we need a very, very quick fix solution to this West Asia crisis.
Absolutely. A quick fix solution. One can only hope. But you've been, despite this, deploying capital quite aggressively. What would be your messaging to investors who are still sitting on cash waiting for the right opportunity?
So there is never a right opportunity, right? So people got so negative in March, but the rebound in April was equally strong. In fact, if you see, I think year to date, we are down maybe marginally. Funds are pretty much there in terms of positive. So there is obviously expectation that once this West Asia crisis is behind us, as I mentioned to you, all the fundamental parameters are in our favor, and we should start to see a sustainable up move. However, obviously, when you compare India with some of the other peer group, particularly in Asia, which are tech heavy like Korea and Taiwan and Vietnam and China and Asia, India comes out as underperforming massively. But I think that's a function of tech, non-tech, and also the fact that India did so well till 24 and those countries were suffering. So it's more a catching up. I would still say that India does have the potential of growing at 6.5, 7% in terms of our real GDP growth, which no other large economy in the world has. India is a large country, so the whole democracy, demographics, domestic demand is definitely going to play out. And now with this underperformance, which we have seen over the last 21 months or so, I think now there is room for catch up. So we are still, telling investors that have modest return expectations, but be constructive.
Okay, modest return expectations, and you are seeing that pickup coming in. You've also said that there is alpha being offered within the broader market. After the kind of correction, the bounce back, is there still room for upside within the broader universe?
So actually, if you see, that is what happened. In March, everything obviously corrected. Global markets also corrected. But April, the broader markets have done much better. So the mid and small caps have done much better, largely because the results or the corporate profitability in that segment has bounced back much sharper. So India is a large country. We have presence across sectors. We have so many listed companies. It's interesting. It's always there is always an opportunity somewhere or the other. However, we have to be careful. Mistakes you can't digest at this point of time. You can't afford. Because we are not looking at 25-30% returns. And when you're looking at 12-15% returns, you better make less mistakes. Otherwise, those mistakes will eat into your returns, right?
Yeah, you're right. Can't afford to be making those mistakes, given that you said also we're going in with modest expectations this time around. What about the fact with the tariffs? Companies who have a lot of exposure, chemicals, for example, to these space, textiles, engineering, how big a risk are they at now?
See, it's very mixed. Obviously, a lot of companies will face some pressure on the raw material front, particularly any sector which has linkage in terms of crude-based raw materials will face some issues. And some of the sectors you mentioned definitely will have that. At the same time, so far, demand has been very resilient. Yeah. And therefore, companies have been able to pass on. And that's the reason why you're seeing a lot of companies, declaring very good results for March. I think the challenge and I would say the things to watch out for would be in this quarter, because this is a quarter where the whole impact of the war and the supply chain disruption, as well as increase in raw material prices, particularly crude linked, will be felt. So far, when we speak to companies and after the results, all the con calls which we have been listening to, companies are pretty comfortable by and large. But, we can't, as I said, afford for this, crude oil disruption and Iran war go on for a long time. We will have issues. Already we have seen petrol and diesel price increase in India. I think there is still, I would say, potential for them to be increased quite a bit, because how long will the government be able to bear the shortfall in the collections as far as the selling price and what they're purchasing crude at?
Yeah, we've been bearing the repercussions the world over, so we need that solution. Individual sectors, financials, I believe that has been a consensus overweight for years. Are you not worried about net interest margin pressure overall, or do you believe that there's still upside here?
No, for sure, there is going to be definitely some pressure. So I think financials by and large have done pretty well last 1 year. Obviously, last couple of months, there has been pressure. And logically so, because, if fuel prices stay at these levels, then the government finances get under pressure. And if the government finances get under pressure, they will have to borrow more. And 10-year yields have already inched up about 7%. On the other hand, as and now, when the crude price increases passed on to the consumers, there will be inflation. Already inflation has come up pretty high. And when there is inflation, there will be pressure upside on the interest rates. And therefore, there will be a little bit of squeeze as far as NIMS is concerned. We also have to be cognizant of the fact that last 3-4 years, we have seen a very benign NPA formation, and therefore credit costs for banks have been maybe the lowest for a long time. And the markets are very smart. Already, if you see, the larger banks have not been doing too much as far as their stock price is concerned. But financial as a sector is now pretty large. So we don't only have banks, we have a lot of NBFCs, we have non-fund based financials like capital market plays, asset and wealth management companies, general and life insurance companies, and so on and so forth. So from our side, I think while having a decent exposure to financial, I think the attempt is to also have decent exposure to the non-fund based financials, which will be much more resilient.
You spoke about tech and how India is underperforming, and AI is really shaping industries globally. Break it down for us. What is the big boon or opportunity for AI in India, and where are we lagging behind? And what's the pain point?
No, so right now it's early days for AI globally. So in the early days, it's predominantly the infrastructure players who benefit out of it. Unfortunately, in India, we don't have any of these companies, whether the chip manufacturers, the memory guy manufacturers, huge data center players, because they are very, very capital intensive. And India generally has been lagging behind in anything to do with capital intensive industries. And therefore, foreigners have also been selling India and buying into some of the other countries, whether it is Korea, I mentioned Taiwan and Vietnam and China and Japan. But the good thing is that the ecosystem is being created. And sometimes it is always better not to be the first mover. I think we have benefited out of it in earlier stages of tech also. I think AI globally is going to be definitely a big thing. And there will be a lot of opportunities as well as, I would say, headwinds which will come up. So IT services, the first headwind is obviously you'll need less number of people. And you're already seeing what IT services companies in India are going through as far as their performance in the markets are concerned. But on the other hand, India has a huge ecosystem of really, really smart tech, professionals. And we are very confident that over a period of time, the way India benefited out of so many other developments in the past as far as tech is concerned, even AI will come across as one big opportunity. But frankly, it's still early days. No one is sure of how this will pan out. So we'll have to take it as it comes,
But is there a worry of India becoming more of an AI consumer than an AI creator?
No, I think even on the creation front, obviously we don't have innovative companies, but the support which all these large companies will need, I think India will play a big role there, So we are very confident that India will ultimately benefit out of that also.
What about auto ancillaries? You've been quite constructive here. Is there still a case for a bull market here?
So auto generally has done very well in India, and ancillaries are, the ancillary benefit out of the boom in auto. A lot of these companies are good companies. And what is also happening, there is an added, I would say, opportunity coming up, because a lot of these auto ancillary companies are also going into defense ancillaries and railway ancillaries and, some high-tech ancillaries. So we are constructive there also. And auto sales growth looks pretty resilient, So even May has gone pretty well so far, not as great as March and April when we speak to some of the companies in terms of car sales and vehicle sales, but still pretty decent.
And what about quick commerce, one of the hottest themes in the market? But do you think that the valuations are running a little bit ahead? How are you viewing this space?
So quick commerce for a consumer is a great thing. I'm very sure you and me and everyone else uses it very, very regularly. And it's been a very great business from a consumer perspective and also a big opportunity. And there are a few companies who have done very, very well on the listed front also. However, what is happening is that huge market caps are creating competition. So earlier, the profit pool used to be a pull in terms of fresh competition coming in. Now it's changed to the market cap coming in and bringing in competition. So we already have so many new players lined up. There's another company which is going to come out with an IPO very, very soon. The likes of Amazon and Jio and Flipkart, they've all started their own version of quick commerce. And that is the reason you are seeing pressure on the profitability. Like they're making more losses, they're still not profitable.
Yeah.
And the stock prices have also corrected. At Abakkus, we don't invest in loss-making companies. And therefore, though we might be positive from a growth perspective, we are not investors in any of these companies.
Fair enough. So then what is it that you're looking at? Where could we see the most promising sectors, the sectors that you believe an investor can bet
So
on?
pharma is something which we like. It's a small sector. I think metals, again, we don't go beyond 8-9% weightage because it's a deep cyclical, but metals is something we like. I think industrial capex, again, is something which we like. Though stocks specific you have to be, because some of the stocks are really, really expensive there. And financials overall we like, but within financials, we would like it to be more diversified, as I said earlier,
Yes.
between, fund-based and non-fund-based financials. Again, India is such a large country, I mentioned earlier, with so many companies and so many sectors. I think you get some of the other opportunities. Yeah.
If we just were to get your advice, Sunil, since we have you, for a retail investor, say who's just starting out or who's been investing for a long time, what is the single biggest wealth destroying mistake that they are making today?
I think investors have been smart. The SIPs have continued, and though the returns could have gone up and down, I think they are making a decent returns. So I would say that not too many of them are making too big mistakes, but obviously, there is always a lure to make large sums of money and very quickly. I think that is the biggest mistake, because, to make large sums of money very quickly, you have to indulge in leverage and you have to indulge in option trading and some of those, or momentum. And that really comes to bite. So in a challenging environment like what we are going through, mistakes are unaffordable.
Mistakes are unaffordable. You manage around 40,000 crores, but say you were a 35-year-old investor with a corpus of 1 to 5 lakh rupees. Where would you advise them to park their money right now? Are you advising them lump sum, SIP, direct stocks, MFs?
So I'm still 35, so I think.
You look it.
So, I would say that SIP gives peace of mind.
Yeah.
But if you have this sum of money to invest, I would definitely advise a lump sum. Because our view is that the downside at this point of time is limited. The upside, if Iran were to be sorted, can be pretty quick. And in an environment where over the next 3-4 years, we are looking at like low to mid-teen kind of returns, no investor can miss out on this 10-15% move, because then the return overall after this move can be pretty low. So if you have lump sum to invest, you should invest lump sum. But
Now
SIP is an evergreen thing. I think every time is a good time, and we have already seen a correction in the month of May. Result season is almost done. Results have been pretty good. As I said, the only caveat is this Iran thing has to be sorted, because we can't afford oil at $120, $130 for sure.
Hi, I hope you're enjoying this interview. If you could just take a moment to hit the subscribe button, it would mean so much. And do remember, you can catch this episode on YouTube, Spotify, or your favorite podcast platform. Thanks so much. Everyone talks about asset allocation. What is your advice apart from equities? Which other asset classes and how much?
So for a 35-year-old, obviously a big chunk has to go into equity, because equity is a growing asset. See, you can have some money in fixed income, but the return there are like 7% pre-tax, and based on your tax slab, maybe 5.5% post-tax. Gold and silver are non-growing assets. You don't get dividend, you don't get interest. So if you buy 100 grams of gold today, after 20 years, it is going to be 100 grams only. And now we have already seen a very sharp move up. So from here on, I don't see them moving like the way they moved in the last 1 year. So it can be a small allocation. For a small investor, investing overseas is difficult. But over a period of time, I think Indian investors will have to start to look at overseas investment also. Real estate is a complete no from an investment perspective at this point of time.
There is this growing narrative all said and done, Sunil, that India globally, the global people are viewing us as uninvestable due to the currency, the fact that we have seen valuations looking expensive. Is that disappointment or is that criticism fair?
So, investors are investors, and there is always a recency bias. What has happened over the last 1-2 years, we believe that it's going to continue for a long time. So just go into the past. In 2024, which were the most hated countries? Korea, China. China had given zero return over the last 10 years. So 2014 to 24, China had given zero return, 10 years. Japan gave zero return for 30 years. Korea, no one even wanted to touch with a barge pole. Taiwan, they were worried that what would happen if China were to, take it over or whatever, And now see, last 1.5 years, those are the countries which have done well.
Yeah.
So sometimes the view is based on what we have undergone over the very, very recent past. And therefore, I would give the benefit of doubt. Yes, India is right now out of favor, but all it will need is 3-4 months of stable performance. And currency again becoming more like 93, 94 and staying there. I think that is what will bring foreigners back. But at 12% weightage in emerging country index and foreign holding in India at a 10-15 year low, and India being maybe the only large economy which can become $8 trillion over the next 8-9 years, I think there is a big risk for any global investors to be ignoring India.
So why are they ignoring us right now? The
As I said, it's recency bias.
Okay. Yeah. Do you think that deeper structural reforms are needed in India to change things around?
So India has done quite a bit. And to be fair, for various governments over the last couple of decades, India has been very open with foreigners. Yes, sometimes a small tweaking of taxation becomes a little bit of irritant. And I think that is where the government has already started to maybe, work on it. We already saw some announcements on the bond side in terms of capital gains. Wherever there is need, I think they are very receptive and we will see that. From a foreign investor's perspective, it's not only stability, but stability of currency also, which makes a big, big difference. So I think if Iran were to sort out, then currency will also sort out. And I'm very sure that India will do well then.
Yeah, you've really brought this up a lot, and I'm sure it's on all investors' mind. When will this conflict be over and behind us? What about your personal journey, Sunil? Because you entered the markets at the IPO boom era in the early 1990s. What did you learn about the markets? Can you tell us more about your personal journey?
I think it's been very eventful but very satisfying. And what we are seeing right now in terms of market behaving the way we have seen worst. In the past. But the thing is that if the economy continues to grow, then money will be made. So I think in my journey over the last 30 years, I think that is what has come out. Be positive because the country has grown. So even if you see the last 30 years, funds have become 300, 400 times. Wealth has become 300-400 times for those who have stayed positive. During Lehman in 2008, index fell by 60%.
So what did that teach you?
So that teaches that, you have to bother about things which are in your hand. Yeah. Sometimes things are not in your hand and you have to take it in your stride and be patient.
What you can control.
Yeah, because ultimately, as I said, if the economy is going to grow, there will be a bounce back. And I think that is what has happened. That happened during COVID time and that has happened so many other times. The only thing I would say is that creating wealth is a journey. You can't create too much wealth very, very fast. Yeah. If you try to do that, then you will make mistakes. So I think keep the basics right. Our tagline is believe in the basics. And that is what we try to do. Be positive. And as I said, be very clear that wealth will be made over a period of time, but it will surely be made. And I think that is what we have to do. Mistakes, we will keep on making. The only thing is don't repeat the mistakes. So, as long as you don't repeat the mistakes, I think you'll be fine.
Yeah, you can only make the same mistake once. And like you said, keep it with the basics. It sounds like such easy advice, but I guess it's a bit difficult to actually follow through. Today we have information at our fingertips. Earlier on, you were going through those reports as and when you got them. So what do you do with all this information overload today on annual reports, stock markets?
No, I think you are right. Sometimes in the past, we used to rue that we don't have enough information. Now the problem is we have too much information. It's impossible. And earnings season, the way we are going right through, is so stressful. Days are 16 hours and then also, you are not able to achieve what you intend to achieve. So you're right. And I think that is where technology will play a big role. So, we have a large investment team, almost 21, 22 people, and we track 425, 430 companies internally, but that is also not enough. So I think what we're doing is we have created AI tools, and that is not going to reduce this number of people which we need. In fact, we will have to add people, but it will allow us to analyze more information very, very fast. So this 425 companies, we can take it to 625, 650 companies. And there are tools now, you can set your filters, you set your parameters, and, every 1-2 hours, we get a very crisp 1-page, 2-page reports of the relevant information. And I think the AI will become more and more intelligent as we keep on prompting.
Yeah.
So I think you'll have to use technological tools to do this. But one thing is very clear: no investor can do everything and make money in every stock that moves.
Yeah,
At some
absolutely.
point of time, we'll have to focus that, okay, you
Yeah.
can't make money in all the stocks all the time, but these are the things which we do. And we are very happy with making some alpha over the market returns and making the least number of mistakes.
You win some, you lose some. That's the name of the game. And, you've also said that money solves a large part of practical problems. How has your relationship with money evolved or changed over the years?
Oh, so, yeah, you are right. I think I always say that 90% of, I would say stress in the life, money can solve, not 100%. It's not a sure short recipe of good health and happiness, but definitely money is important. However, it's not that, at least for me, that having money is going to change my lifestyle significantly. Okay, I might have a better car or a better house, but spending money on things is not something which you bring out. It's a DNA.
Okay.
And I would say that working hard and being successful is fulfilling. I think money is an outcome.
Yes.
It's not a goal. And I think that is what at least I personally follow. Yeah. But yes, you tend to at least not have 90% of the worries, which otherwise, if you don't have money, you would have had.
Absolutely. So what are you teaching your children about, life in general, their relationship?
So both come to office and both come with me at 8:15. We leave office. So I think the first thing is discipline. So both have to work out at 6 o'clock. If they have to go to the gym, they have to go to the gym at 6 o'clock because we leave
8 a.m.
8:15 we leave. So I think that is good because, being on time definitely helps. And the other thing is, they are fortunate they don't have to bother about the basics things. But at the same time, because they're coming and they're seeing other people work and their friends at work, they realize that how difficult it is to make money, and when you know that, then when you go to buy something, you will see the tag also, rather than just picking up anything without bothering about it. So I think it definitely helps.
Yeah, it's important to have that discipline for sure. And you've grown Abakkus from 0 to 40,000 crores. You have that drive in you. What's next? What is the philosophy and the vision?
No, so I think this 40,000 crores again has been an outcome. It was never the goal. So when we started Abakkus also, we in fact had no salespeople for 2-3 years. Our view was that if we do good work, if our investors are happy, then there is more than enough for us to get in terms of number of investors and AUM and so on and so forth. So we launched the AF to begin with. Then we went into PMS, and we had offshore funds. We have a private equity small fund now. And we have got into mutual funds last 4-5 months. Mutual fund has also scaled up to beyond 5,000 crores. We had a small celebration to celebrate 5,000 crores of AUM.
Congratulations.
Thank you. And 1 lakh investors. But, the opportunity is huge. But again, I would say that our view is that if we continue to do good work and if our investors are happy, then we are still not even a drop in the ocean as far as the overall mutual fund industry and the asset management industry is concerned. We would get our, due share.
I'm sure a lot of people who are watching you, those who track the markets, and you've, of course, had a very strong work experience. You've grown Reliance Mutual Fund. What did it take to come out of that, to leave that, cushy corporate job and start out on your own? And any advice?
So see, when I joined Reliance, it was like a startup only. Though it was Reliance, I think we were the smallest mutual fund. We had like 35, 50, I don't even remember, crores of AUM.
Really? Yeah.
We were 35th out of 35 mutual fund. But I always say this, when you are last, that is the best thing because you can't be worse than that. So you are, you take calls not because you are scared that someone else will go ahead, but you know that you have to go ahead of it. And you are looking ahead and the guys who are ahead are looking back. I think the same thing we inculcated when we set up Abakkus. Obviously, as you rightly said, after working for so long and with a very cozy office and a cozy job, a lot of power, a lot of respect, it is tough. And, my daughter used to tell me that my cabin in Reliance and my entire office in Abakkus was of the same size. So it is tough. But I think God has been kind, and the good thing is that we have great relations with the entire fraternity, investment fraternity, distributor fraternity, investor fraternity, and they gave us a lot of wishes and love. And I think we have turned out to be good. I think the most satisfying thing about the journey is that we now have 170, 180 people. So, we've been
Amazing.
able to create so many jobs.
Yes.
And very energetic, young.
I could see around me.
Yeah,
Absolutely.
so it's happy working,
Yeah.
And as I said, even in the mutual fund, we started as the 48th mutual fund. I think we've already reached 40th. That also my people tell me.
Wow.
Let's see, I think the people who are ahead of us are looking back. We have to look in front.
And I have no doubt that you're going to get into the top 5 in
no
no time.
As I said, that is not the objective.
That's not the
objective is to do our work diligently
Yeah.
and work in the interest of the investors. Everything else will be an outcome.
And you're so passionate about what you do, right? So that's
So that's fun.
That's,
You have to love coming to office.
Yes. A quick rapid fire, so snappy
Sure.
answers. Indian markets today, expensive, fair, or just misunderstood?
Fair.
Okay. One sector you're most bullish on for the next 10 years?
Wealth and asset management.
Okay. One red flag that you would tell investors to avoid while investing?
Story and momentum.
Okay. Patience or intelligence, what matters the most while investing?
I think both. You need to have intelligence to be patient.
Yeah. You said that right. Yeah. And do you have any regrets?
See, you should always have regrets. Otherwise, you will not be able to improve. So a lot of regrets.
That's a great way of looking at it. And what would be your one advice to your children about managing money and maintaining it?
So I think they should not get carried away.
Okay.
Looking at the money, and all of us are in a position of trustee as far as our wealth is concerned.
Okay.
Someone is managing it for their family, someone is managing it for the society, so you have to be very sure that God has been kind, our elders have been kind, we are fortunate, and we have to respect that.
That's amazing. And India as a stock market, the wealth creation journey is or will be fill in the blank?
Fantastic.
Oh, amazing. So on that very positive note, Sunil, thank you so much for joining in today. Thank you. Well, that certainly was an interesting interview. We really tried to pack in as much as we could with Sunil Singhania over the last 30 minutes. And here are his key takeaways. He said that the Indian economy has remained resilient, but the Iran conflict with Israel-US is the biggest concern right now. And that is really going to be felt on the quarterly earnings in the upcoming quarter. But nonetheless, he said that one should invest at this point in time, but brace yourself for modest returns of 12 to 15%. In terms of sectors, pharma, metals, industrial capex, diversified financials, those are the sectors that he sees a lot of potential in. He believes that SIP does give comfort, but lump sum is a good opportunity. And if the economy recovers, there is money to be made. Do remember, you need to be a disciplined investor. Creating wealth is a journey. Be patient, believe in the basics, and be positive. I hope you enjoyed this interview. Do remember to subscribe, like, and comment. Share with us which guest you'd like to see next on the show. Thanks so much for watching. We'll catch you next time.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.